Hey, what's up guys? Bitcoin supply becomes very small. In this video I will explain diminished Bitcoin supply, then we will take a look why this bull market is different. This could be a massive super cycle that will take Bitcoin over $1 million. Let's take a quick look at the cryptocurrency market. As of the time of this recording, Bitcoin is trading around $47,000 with a market cap slightly below 900 billion bucks. Right now, Bitcoin also worth more than the entire cryptocurrency market back in 2017. Currently, the entire cryptocurrency market is almost at $1.5 trillion. This is insane. Ethereum is over $1,800. Yesterday, Ethereum actually hit an all-time high over 1,870 bucks. Cardano is trading slightly below 90 cents. In fact, the entire cryptocurrency market pulled back a bit just slightly from yesterday. We know that Grayscale Bitcoin Trust accumulates Bitcoin like there is no tomorrow. Now they are doing the same with Ethereum. Since Grayscale Ethereum Trust opened in November, the fund accumulated more than 3 million ETH that is currently worth $5.5 billion. Just yesterday they bought 53,000 Ethereum at a value of $94 million. The demand from institutions after Ethereum continues to increase. Here's the chart that will blow your mind. This chart represents liquid and highly liquid Bitcoin supply. From highly liquid Bitcoin supply, you can probably get those coins from the cryptocurrency exchanges. For the bigger players that buy Bitcoin from OTC market, it's more complicated, and therefore they usually buy BTC from just liquid supply. So altogether, liquid and highly liquid current supply is only 4 million Bitcoin. There is only 4 million Bitcoin you can get your hands on, and the number is steadily declining since the beginning of 2020. Just to give you a bigger perspective, there won't be more than 21 million Bitcoin in existence ever. Currently, there are more than 18.6 million Bitcoin has been minted for the past 12 years. So, if there is only 4 million Bitcoin that is liquid and highly liquid, it means that there are 14.6 million Bitcoin are illiquid. Those are the Bitcoin you cannot buy from the market. This includes Satoshi's Bitcoin and of course my Bitcoin, since I am not planning to sell it. As more and more corporations and institutions buy in Bitcoin, that 4 million BTC becomes lower and lower. I'm not going to be surprised that by the end of this year, there will be only 2 million or possibly even 1 million Bitcoin that is liquid. Can you even imagine what might happen to the Bitcoin price in that case? Bitcoin price will go to the moon. Now, let's take a look at this super bullish chart. This yellow line represents Bitcoin dormancy flow and the black line represents, of course, Bitcoin price. Bitcoin dormancy flow is the ratio of the current market capitalization and the annualized dormancy value measured in US dollars. An adjusted dormancy flow can be used to time market lows and assess whether the bull market remains in relative normal conditions. It helps confirm whether the Bitcoin is in a bull market or bear market. If the Bitcoin dormancy flow reaches 1 million, this is a strong indicator that the bull market just getting started. Back in 2011, as soon as the ratio surpassed 1 million level, Bitcoin price spiked massively. Then in mid-2012, we had even bigger bull market. The dormancy flow crossed 1 million, when Bitcoin was trading at around $10. Back then, in that bull market, Bitcoin reached all the way till $1,100. And notice the dormancy flow ratio did not drop below 1 million level for the entire bull market. Then, when Bitcoin entered into the bear market, the dormancy flow dropped respectively. Then we had another 2016-2017 bull market. This ratio surpassed 1 million in January 2016. This is the time when Bitcoin was trading at around $400 a coin. In that bull market, Bitcoin increased from $400 all the way till $20,000 by the end of 2017. Also, dormancy flow did not drop below 1 million once again. It touched the line a couple of times, but it did not drop below. Then of course, as Bitcoin went into the bear market, the ratio dropped respectively. In 2019, we had a fake breakout, in which case Bitcoin was consolidating sideways for the most of the part except the coronavirus massive drop. And just recently, dormancy flow tested 1 million level once again. So it will test it again, and if it surpassed the line, I believe this will be a huge bullish indicator for the massive bull market run. In 2019, we did not have large corporations and large institutions buying Bitcoin, but right now we do have that. This is why the current Bitcoin price is at $47,000, and this could be just the beginning. In 2012 and 2013 bull market, from the point where the ratio surpassed 1 million, Bitcoin increased by more than 100x in that bull market. In 2016 and 2017 bull market, the dormancy flow surpassed 1 million when Bitcoin was at $400, as I mentioned earlier. In that bull market, Bitcoin topped at $20,000, and that would be 50x ROI. Right now, we just tested the line. If the dormancy flow surpasses 1 million and stays above that line, we can truly enter into the massive super cycle. In the first cycle, Bitcoin made 100x. In the second cycle, Bitcoin made 50x. And in this super cycle, Bitcoin can easily make 20x. Let's say if dormancy flow surpasses 1 million level, when Bitcoin price will be at $50,000. Then, from that point, 50,000 times 20, that would be $1 million. Of course, it would not happen in a single year. This super cycle could last 2+ years. This is what Dan Held is talking about. Let's take a look what Dan Held has to say about the upcoming super cycle. He will explain why this super cycle is different from the previous two, and then he will give us his price target in this upcoming super cycle. Let's take a look.
When I look at these cycles, though, what makes me very excited about this upcoming one, which could be, and I'll go into this in a little bit, a super cycle, is that this time is different. The 2013 bull run, the 2017 bull run, it was mainly based on retail-driven speculation. The macro markets, the rest of the world, was doing fine. It was a large bull run. And these were mainly speculative cycles run by retail with a very shaky infrastructure. Especially in 2013, you had Mt. Gox, which was a horrible infrastructure and a horrible critical component that broke down at the peak. With this bull run, we've got a lot of different things lined up. One, we have COVID, which occurred. COVID was the catalyst moment that makes Bitcoin shine. With the COVID lens, when we look at Bitcoin, for most people who had dismissed it previously, now it makes sense. And that's where we see this echoed by the institutions. The managers of all the wealth in the world, the large portion of the wealth in the world, they look at Bitcoin as a store of value, as a gold 2.0, which was my investment thesis back in 2012. That's what Bitcoin represents. It's a gold 2.0. And that is a huge value for the world. As we saw governments had their response to COVID being money printing, that will devalue these currencies eventually. And folks are looking at the 21 million fixed hard cap of Bitcoin. They're looking at this monetary policy. They're looking at Bitcoin's construction and how decentralized it is and how you can store value in it and no one can take that value away from you as this incredible lifeboat. And, it's hard for people to really understand that you need a lifeboat until your ship is sinking and you're like, oh shit, I need a lifeboat. Mm-hmm. But, selling lifeboats when there's no ship sinking, there's not a big market for that. And so Bitcoin's demand or people believing in Bitcoin, that market has grown tremendously to where now we have institutions. We also have a much more vast retail customer segment. So retail buyers can now buy Bitcoin in PayPal, Robinhood, Cash App. They can buy it everywhere. And eventually that's going to reach like brokerages like Fidelity, like within a retail brokerage, Fidelity or E-Trade and Interactive Brokers. Eventually, you're going to be able to buy Bitcoin everywhere, which means Bitcoin can now tap into all demand that wants it. Additionally, retail can better understand Bitcoin due to like podcasts, like What Bitcoin Did, some of my writings, hundreds of other Bitcoiners' writings. We've now compressed the narrative to where we convert someone from a no-coiner to a Bitcoiner much more rapidly than before. Before, you'd have to spend tons of time reading about it. Now, you could listen to 2 podcasts, watch 1 YouTube video, and read 1 article, and boom, you might be convicted. So we've got institutional demand, retail demand, the macro backdrop of this whole world kind of aflame. And then within the crypto community, we only have really one narrative right now, gold 2.0, store of value. Bitcoin totally dominates that narrative, whereas before that narrative was dominated like in the 2017 cycle by Ethereum and ICOs. And so that really diminished the Bitcoin's resounding narrative of store of value. And that's where we're seeing Bitcoin's purpose for why it was built, shown in this cycle as like in the macro world, Bitcoin stands out as this safe store of value. We've got more ways to buy it than ever. Bitcoin's not going to look like the other cycles. People go, oh, well, it's just going to have a typical cycle of it's going to go from this up this 10x, 20x, and then we'll have a bear market. And I'm like, I don't think so. the world didn't realize why they needed Bitcoin back then. They just speculated on it. And now they realize why they need it. I mean, governments across the world are engaging in huge money printing operations. They're doing wealth confiscation. There is no better moment for Bitcoin than this moment. And then if you look at Bitcoin's fundamentals, in the 2017 cycle, we had a civil war. So when I talked about those cycles before where you had people come for the speculation and stay for the sound money, well, more people now understand why it's sound money. Because of COVID, they better understand why Bitcoin is valuable. And they're not just in it for the quick, flip of a 1x, 2x return. They're in it because they need to flee policies with their local governments, where their local governments are printing tons of money and devaluing their currency. And that's where I've seen the narrative shift with friends and family who never believed in Bitcoin before. And now they're like, I need to get my money the hell out of here. This is a way to escape. So when that happens, I don't think we see a bear, because the bear before was just all the speculators leaving. But now these speculators are largely people fleeing for good reasons. So I see the bear market being much more mild this time around, as people woke up to Bitcoin's value and they come in and they store value in there permanently. And so I just don't think we're going to see that previous cycle from both a bear perspective. So how much drawdown will we have from the peak, and also the bull? A lot of people reference the 2017 cycle because that drew in the most folks before this cycle. And they reference that as their anchor point for how a bull run looks. Well, in 2013, we actually had two bull runs. It went from $10 to $260 down to $100 in March 2013. And then later that year, from like October through December, it went from $100 to $1,200. So we could see something like that. And I would consider that to be a super cycle. I would say that plus like a much more mild bear would constitute my description of a super cycle. I think price is what we look at to define a super cycle. Yes, sure, there's a lot of on-chain metrics and volume and everything else, but the price is the cleanest distillation, or as product folks might call it, the KPI. I think, we look at, there's a whole bunch of ways to look at this, right? If we look at what a traditional cycle would look like, people are looking at anywhere between 100,000 and 250,000. That's using like historical price action. That's looking at like a decaying rate of return with the cycles. There's a million ways to slice this, right? So I think between 100 and 400K would be, between 100 and 300K would be defined as a classic cycle. A super cycle would maybe take that a little bit higher to like plus 800,000, right? So that's where maybe a super cycle, I would maybe use that as the definition of one, is like going past like 800,000 or closer to 1 million. I think that would be like, by the way, super cycle is more of a fun idea to throw around and think through. And the reason why I like it too is that almost every single time I've looked at Bitcoin over the last 8 years, in every single market, the status quo is typically wrong. Like whatever everyone's predicting, it's probably not going to do that. And no one's predicting a super cycle. No one's really thinking about like, oh, wait, this time is very different. People are like, oh, let's look at the last two bull runs. I'm like, yeah, but the last two bull runs didn't have COVID or anything. And so I think that, yeah, like I would say like close to 1 million is what the KPI would be for a super cycle. And why I like it is no one's talking about it. No one even thinks that's possible. And everyone just thinks it's going to do what it did before. And it's a very different environment.
Dan Held believes this cycle might be different because other Bitcoin cycles was driven by inexperienced retail speculators. And this cycle is driven by sophisticated investors, big institutions, large corporations, and high net worth individuals. The biggest catalyst of them all of this super cycle is coronavirus. That was ultimately a free Bitcoin marketing campaign, and of course a massive money printing. In the end of the super cycle, Dan Held believes Bitcoin may reach $800,000 to $1 million per single coin. This is precisely what the Bitcoin dormancy flow predicts. Will that happen? Only time will show. Let me know what do you guys think about this upcoming Bitcoin super cycle. Leave your thoughts in the comment section below, smash that like button, and subscribe for more videos.